Hey guys, what is going on? Welcome to the video. So we had another volatile week in the stock market, and in this video we're going over what to expect next from the market, including Bitcoin, what to expect, a potential up and coming sector, and then also the top 3 trade ideas that I'm watching in the week and weeks ahead. As always, there are timestamps in the description. Let's go ahead and get into it. So starting out by taking a look at the S&P futures chart, there was pretty messy price action to begin the week as it built out a consolidation above 58.80 as key support. It briefly broke below that level on Tuesday, but reclaimed above it, which triggered a failed breakdown and rally back up. From there, it rallied up to 59.50, pulled back from there to test 58.80 once again, which held as support, and then rallied further from there to close the week up to 59.85 to 59.94 as key resistance. So there's not too much to take away from this price action, other than sellers had their chance for a larger pullback below 58.80, but blew it, and buyers continued to be stronger and in control of the trend. Also, a pattern that built out during this was a rising wedge pattern, where both trend lines have respected well. So rising wedges are bearish reversal patterns by nature, so a break below that trendline support can start another pullback attempt, and would be one caution sign to watch for if that plays out. So into next week though, the key pivot levels to watch are at 59.85 to 59.94 on the upside, which above there triggers further upside, which can target the trendline resistance and 60.10 and then 60.35 to 60.40 above there, and likely sees new all-time highs on a successful break above 60.40. On the downside, 59.50 is the key mid-pivot to watch, and below there is trendline support, which if that breaks, it can target a move back down to 5900 to 5914, 58.80, and 58.68 as those next levels below. So before we get into some stock trade ideas, let's first take a look at Bitcoin, which we've been talking about in every video since before it broke out to new highs. It's been nothing short of an amazing move, so the question is now, what is next? And side note, I'm filming this video before Bitcoin has touched 100,000, but I'm guessing it's at least touched it by the time you guys are watching this. So anyways, since the large breakout move, everyone has been anticipating 100,000 per coin coming, and because that is such a widely known and talked about price target, a lot of people are expecting that to act as major resistance and Bitcoin to start to pull back once that target hits. But because everybody is thinking that, in my opinion, it is more likely to break through and run higher before starting a pullback. If everybody thinks something is going to happen in the market, it tends to not happen. So in my personal opinion, Bitcoin breaks higher first, maybe runs up to anywhere from 103,000 to 110,000-ish, and then see a pullback after that overshoot above 100,000. So something like I drew up here would be a top scenario that I'd be watching for, where it runs up further, then pulls back and builds out a base below 100,000, and then after that base building period, it could explode higher towards new highs afterwards. So something like this is just my personal opinion, and truly anything can happen in the crypto market, but we will see. And before we get into some charts, I thought I would share this tweet with you guys from David Ryan, who is one of the greatest and most experienced traders in the world. He does not tweet often, but when he does, it is smart to listen. So he's essentially saying here that he's recognizing some big rotation from the market into mid-cap stocks, and points out the XMMO ETF, which tracks mid-cap momentum. Another mid-cap index that you can watch is the S&P 400, and that's with ticker symbol MDY. Both of these have very similar setups. It can also be notable to focus some stock scans on mid-cap stocks for your personal trades. Alright, so now getting some trade ideas for the week and weeks ahead, starting out with Google, ticker symbol GOOG. So mega caps have shown weakness versus the overall market over the last couple weeks, with Google being one of the weakest, and it is testing a major decision point on the chart. So where it's testing and held so far on Thursday and Friday is this major cluster of support, which includes the 165.6 level, the 200-day moving average, which is currently at 165.45, and the backtest of the previous trendline resistance as new support. So this is a must-hold level for buyers, and they want to see a strong reaction off this support, which if so, it can target a move back towards 170.5 to 171.4, which a reclaim back above there opens upside towards 174.2 and 180 as those next key levels above. Or if it breaks below this support cluster, it triggers further downside, which can target 161.4 to 161.7 and 156.5 as those next key levels below. So this could either be a bounce trade to long with a tight stop loss below the support cluster, which would be about less than 1% risk, or if it breaks below it, it can be a short opportunity with a stop loss above that cluster of support, and due to it being such a well-defined support zone, it can offer trades in either direction off of that zone. Tesla, ticker symbol TSLA, was obviously one of the largest election beneficiaries, and after the huge move, it has held up very well, with the pullback getting bought up strong. I initially thought that this was a high risk for a fade back down, like it had those previous spikes that the stock often has, but at this point, the strength that it has shown should not be ignored in my opinion. Now, this doesn't mean that it cannot fade, and a larger basing period or consolidation period would certainly be ideal before attempting upside, but this could be more similar to those moves it had in 2020 and 2021, where it ran up 100% plus from its base. If we zoom out and take a look at the log scale chart, one could argue that from the end of 2020 until now, it has just been building at a large base, and of course we know what happened out of a similar basing period that it had from 2014 to 2019, which looks very similar to the one that it has built out now. So zooming back into the chart, 358 is currently key resistance, and the stock would need to break and hold above there to start the next leg higher. And those next target levels above would be at 371.85, 378.75 to 380, 390, 400, 405, and then previous highs at 414.5. And levels that we can watch as key support below for possible dip buys are at 347, 335, 324, and 314. For immediate upside from here though, it would ideally see no lower than 335 from here. Robinhood stock, ticker symbol HOOD, is another potential new market leader to keep on watch, as it's one of the big election beneficiaries due to lower regulation, and also a big beneficiary from all the crypto hype and new coin listings. So this isn't necessarily a clean setup or base that can make for a clean trade, but the main pivot points to watch from here are 33.95 as support and 36.68 to 38 as resistance, which can trigger the next leg higher above there. So breaking above 38 can target 40, 43.35, 45.9, and then 50 as those next key levels above. Ideally, it consolidates here for a bit before attempting that break higher, but if not, it may just be off to the races above $38 per share if that was to break. So that is what I'm watching for in the week ahead. Thank you guys for watching. I would not be surprised if the market continues this volatile consolidation phase up until December, where we could see a potential December Santa rally if that's what the market does. So just something to keep in mind. For anybody interested in joining the private Discord chat, that is the first thing down in the description to get my personal trade alerts, nightly watch lists, and answer any questions you guys have in there. Good luck trading the week ahead, and I will catch you guys next time, and peace out.